The views and opinions expressed in this podcast do not necessarily reflect the views or positions of Acuma, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome to Acuma's On Point podcast, the policy series, where we focus on policy issues impacting the credit union mortgage industry. I'm your host, Peter Benjamin. Today's episode is being brought to you by Lender Price, the most modern and proven product and pricing engine in lending. Whether it's enhancing the pricing experience or efficiently matching home buyers with the ideal loan program, Lender Price empowers all credit unions to excel and innovate in today's dynamic market. Their cost-effective pricing engine provides modern APIs that deliver seamless integrations, full product and rate support, custom workflows, and it's simple and easy to use for loan originators. Lender Price is proud to sponsor the Acuma On Point podcast policy series, where discussions on the policy issues impacting credit union mortgage lenders take center stage. Get to know Lender Price and book a demo at www.lenderprice.com. Joining us today as our resident expert, Zach Visser, Policy Director with Brownstein. Zach, welcome to the podcast. How are you doing today?
Great. Thanks for having me back.
Awesome, man. Hey, again, I love these episodes because it gives us an opportunity to sit down and kind of connect on the latest and greatest happening in DC and really, kind of bringing in, our recent event in Nashville, where we, where our other resident expert, Leah, and really Anne-Marie from your team kind of came out on, I guess this is about, 2-3 weeks ago, but still a lot's happening. At least my email's blowing up with stuff. So I think we have a full agenda of things that we're going to cover today on things happening in DC. I think you can agree with that, right?
Absolutely.
Okay. So let's start from the top. What are some things on your list that we can quickly hit on things happening in DC?
I think I'd start with a recent development on the ongoing dialogue on Capitol Hill, big hot topic issue of the last year or so being AI. I know we've discussed some of this in the past, and Congress has been on somewhat of a slow march in better educating its members on the use cases of AI, the risk versus reward, the cost benefit analysis, ranking everything from the technological use cases, but also potential impacts in the future around worker displacement, for example. I mean, the more you automate, the more you run the risk of that. And at its core, every member of Congress is worried about their workforce. Some members look at this issue from a technological and entrepreneurial standpoint. Some members look at it from a consumer protection standpoint, and others look at it from a national security standpoint. And so, over the past year, both the House and the Senate have had separate kind of bipartisan working groups that have been working through these issues in the form of committee hearings and various pieces of legislation. But so far to date, it's been more of an organic effort. On the Senate side, the bipartisan Senate AI working group, which has been kind of informally working together for the past year or so, they have held a series of forums with executives, technology leaders, industry, consumer groups, and the like on various topics kind of under this broader umbrella. And they recently put out just a few days ago a blueprint roadmap, I think is how it's termed. It's a 30-page document that kind of culminates and summarizes the significant dialogue that they've had with stakeholders over the last year, and then to some degree kind of compartmentalizes these recommendations into various categories. Now, this is, to think of it the best way, this is industry-wide approach from dozens of potential future congressional committees that might be working on actual legislation. But there were some interesting kind of takeaways from the report that I would highlight. For one, there were increased calls for transparency and explainability in AI modeling and algorithms. We've heard a lot about this, especially in the financial services space, about the notion of kind of algorithmic bias, considerations for policies related to those data sets used by the AI developers. So basically, the ultimate owners of those AI models know, at least to some degree, what type of inputs were set at the forefront in order for it to make those determinations. There were calls for consideration of developing legislation to establish a coherent approach to public-facing transparency requirements for AI systems, evaluating whether there's a need for best practices for the level of automation that is appropriate for any given type of task. Notably, and I think this was the most interesting piece that I saw in here with respect to how it may impact financial services, there's a recommendation for a regulatory gap analysis in the financial services sector, encouraging the relevant committees to put forward legislation that ensures that financial services providers are using accurate and representative data in their AI models, and that the regulators have the tools to enforce applicable law and regulation related to those issues. Now, that's a big piece of this, what I would still describe as a puzzle, is the question on how much of this standard development will be voluntary and how much of it will be backed by some sort of regulatory regime, some form of enforcement mechanisms. Current ideas being bounced around are voluntary industry standards being produced out of NIST, National Institute of Standards and Technology. But there, on the other end of the spectrum, there are calls for a new CFPB-like AI bureau or AI protection agency that would be empowered with a whole host of new enforcement authorities. And obviously, that is a wide spectrum. But Congress has a long road to hoe on this. Where they go from here, we should expect over the next 6 months that some of these committees will then, hold additional hearings, but actually start putting pen to paper on draft language respected to their given industry sectors. So we've seen plenty of focus out of the financial services committees on how it may impact, credit unions, banks, and others in this space. However, we should probably expect more forthcoming. And if the elections kind of turn the Congress on its head in terms of who's controlling which chamber, we should expect a whole new set of proposals to be coming forward by those respective new majorities.
Now, and thanks for walking us through that. And feel free to correct me if I'm wrong, but it doesn't seem like, it seems like they're starting in multiple different places, right? It's I'm going to tie it back into the I don't want to say the PAVE task force, but they at least with the PAVE task force, they at least set I guess the standards of things that they were going to look for with the things that they want to accomplish, right? It doesn't even seem like when it comes to AI, they've even outlined the things that they want to accomplish. They're just calling out, well, these are things that we're concerned about, but I don't know if I'm having a hard time following this, and this is a topic that I absolutely love. It's one that I'm absolutely fascinated with, and because it's ever changing, it evolves faster than what Congress or any of us can keep up with. There was already an update to ChatGPT, but it's like it almost feels like we don't even have like the foundation. Okay, well, where do we start to kind of figure this out? But I could be wrong.
I think these task forces would argue that this is them laying that foundation at the very base level, right? These are the principles that we agree upon, as amorphous as they may be. But you're right. When you get into how do we legislate in a way that does not hinder, let's say, a mortgage-focused credit union and their use of a chatbot, but at the same time addresses generative AI that is evolving at a pace that causes alarm for some out there focused on this in particular. And you get into the national security components, you get into concerns around privacy and the like. And it's, like I said, it's a spectrum. And to think that there is a singular comprehensive piece of legislation that will be able to put its arms around all of these, variables it's a hard pill to swallow. And you can consider me a skeptic as well. I would note that I believe the Senate Majority Leader Schumer had stated a kind of a goal of having a big, bold, comprehensive AI bill by the end of the year. And I have yet to run into anyone else in DC that thinks that that's a reality. But in practical terms, it's much more likely that this is going to have to be dealt with a tailored and incremental kind of approach, right? How do we ensure that companies, credit unions, other organizations that are using AI as a means for staying competitive, as a means for eliminating overhead costs? How do we take that bucket and ensure they can still continue to harness the value of this technology in a responsible way and separate that from the more heightened concerns around robot armies taking over, right? And not to sound hyperbolic, but there are groups out there that are dedicated to the latter, right? That to ensuring that AI does not turn us into the matrix. And as fantastical as that may seem, I think that the reality as to where most of Congress is somewhere in the middle, but still very much understanding or admitting that they know what they know, they know what they don't know.
Okay. So I mean, it's again, well, I imagine this will not be the last time we have these conversations, right?
We could be having this conversation for years.
Absolutely. And if for me, just thinking, I'm putting, the lender in me is still speaking, is speaking now, and the lender in me is saying there are 100 different tools out there, right, that I want to use, right? There are 100 different tools out there that could make me more competitive in my market. The problem is that I have no guidance on which ones are either good or going to get me in trouble, basically. And that's what, as a credit union, that's what I'm concerned about, right?
Right.
What are the good ones and which ones are the bad ones? Because in some way, shape, or form, the devil's is in the details. And right now, it just sounds like don't touch any of them, because that's what I'm hearing right now. And I don't want to go down that path, because there's a lot of good data out there, and there's some that genuinely would make me more competitive. And now I'm putting the Acumen hat back on. And if our goal as an association is to help credit unions increase market share and put more families in homes, we need to adopt AI, right? We have to. It provides us a competitive edge in the market, and there are some out there that will do it without establishing credit decision or profiling a borrower in some way. But that's also a gray area, right?
And until that void is filled with legislation, credit unions will have to rely on intermittent and fragmented guidance from the regulators, right? So FHFA may make one determination on AI use cases with respect to their jurisdiction. CFPB may take a very different approach to that. NCUA on top of that, and so we get into this similar dilemma that we and the regulatory regimes of the federal government often find ourselves in, where it's kind of this kind of fragmented patchwork of guidance and rules, whereas we had a kind of a federal AI standard, which I believe that at its core is what Congress would ideally like to do at some point in time. That's what we're going to be relying on, and that's actually a good segue. Speaking of,
but if I could though, just I don't want to. I love a good segue, and everyone knows I love a very good segue. But I think this is different. This is why AI is so different, is because it doesn't just have impact on financial services. It does impact.
Right.
It impacts healthcare. It impacts monetary policy, defense. But it's also something that we have no control over whatsoever, right? And
Right.
that is the truth of the matter. We really have no control over it. And I think that's what
Right.
makes it different. It's not like, I'll say LO comp. I'll just pull out some silly a rule that was put out years ago, right? It's not like a rule that we established that could put controls in place based off how you pay a loan officer, right? This is something that it doesn't just impact the United States. It impacts every country in the world.
Right. And parts of the world are well ahead of us. Take the EU, for example. So, I mean, that actually strengthens the segue, Peter, because
You're welcome.
I was going to say, if past is prologue, we have a case study here to show just how challenging, an issue like AI is going to be to deal with. Congress and the regulatory agencies and state governments have been grappling for, the better part of 2 decades over what to do about a federal privacy standard.
Right.
And one notable inclusion in the AI report was support for, basically doubling down and supporting a strong federal data privacy legislation, which is basically a nod to the ongoing parallel efforts by congressional leaders to put forward a national standard with federal preemption. And the reason that's important, and the reason it's a good example as to the challenges they're going to face with AI, is that many states have taken it upon themselves over the last 5-10 years in particular, where they have gotten far ahead of Congress on the data privacy front. So we have dozens of states with their own strong data privacy laws now, and the challenge that creates, California, Illinois, Washington State, New York.
Yep.
All the problem that that lies therein for credit unions, right, is that they have to deal with 25 different regimes rather than being able to deal with one federal standard that could make that could cut their regulatory compliance burden in half. This bill has been around in various iterations over the last several years. It's currently titled the American Privacy Rights Act. It was a bipartisan bill forged by the Democratic leader of the Senate Commerce Committee and the Republican chair of the House Energy and Commerce Committee. And for all intents and purposes, there is a general sentiment that it is moving in the right direction, right? If you ask any other kind of banking trade, credit union trade, business sector, or they're going to have some concerns with it because it also includes a private right of action, meaning if you're going through a mortgage lending process and at some point in that process you have a breach of that consumer's sensitive financial data as determined by this legislation and future rules that would be promulgated around it, the credit union could be subject to a private right of action, which in some cases has a potential to turn into a class action, and Republicans have historically been very opposed to that front, and Democrats have historically wanted to go a lot farther than where this bill goes on it, and so they took the Solomon's baby approach, right? And they found some middle ground, and no one's particularly happy with it, but it's a delicate dance up there for them to ensure a bipartisan coalition to be able to push this through. And even then, it's going to be incredibly difficult. On the preemption side, and why I think this is also a qualifying concern for credit unions, is that while it does federally preempt most state laws, it does have plenty of carve-outs as well, where the bill determines that the existing statute at the state level might be better suited or might be stronger in some respects. And so credit unions and other financial institutions would still be kind of navigating that to some degree, nothing like where they would be without this legislation. But I think the Chamber of Commerce has kind of come out with those concerns as well. But alternatively, back to having to find compromise. Opponents of this legislation argue that that the federal preemption is far too broad, right? And that states like California will not be able, they will be hindered in their ability to go further in the future, even though that many of these carve-outs were made kind of get California in a good place. But nevertheless, the California Privacy Agency kind of put out a very similar letter of opposition to this bill a few weeks back, similar to what they did last Congress. So it's all to say the challenges remain, and this is a bullet in the AI report. If that puts anything into perspective, is just how gargantuan a task it will be for Congress to tackle AI on a level that is 100x to where this data privacy debate has been for the last 20 years.
Okay. Now, we're time flies when you're having fun. All right. So, but we do a few more minutes. So, but one of the big topics I want to talk about is the CFPB news. This was all over the news last week.
Indeed.
So let's walk through this. Because I think I sent you an email about this, right? This is a good prime example of how we'll say credit union side of our world and the mortgage side of our world do not align. So please dive into it.
Sure. So, obviously, Director Chopra is feeling quite vindicated after the Supreme Court ruling, 7-2. I think it was a number that was even surprising to folks who've been watching this pretty closely. And he immediately, doubled down. I think, like I said, I think he felt vindicated. I think his exact words were the CFPB is here to stay. And coincidentally enough, I believe that he may be up before Congress sometime in early to mid-June. So that should be a very interesting set of hearings to watch if that comes to fruition. I do expect that opponents of the CFPB on Capitol Hill may take the opportunity for some increased activity around some messaging legislation, and proponents of the CFPB will stand firm as the firewall that they always have. It is an interesting dichotomy amongst the banking trades. I think a majority of the ABAs and the ACUs and others, obviously were expressed disappointment. Notably, MBA expressed more of a sense of relief, taking the position that in this instance, so much time, money, resources, history, years, 13 years have been, dedicated and invested in building business models around markets that are adhering to these rules and regulations that have been in place now since the onset of the CFPB. And I can only assume that the calculation is made that the undoing of that, or the legal uncertainty around past rules, would have created more uncertainty and confusion and potential impacts to the market in with respect to the mortgage industry than the alternative. And so it was interesting to see, but I have to assume that's where the positioning is coming from. But it's not, it's not
I'd agree with that, by the way.
It's a valid point. It's a valid point.
It is, 100%.
We've seen this in other industry sectors as well, where it's like you have a longstanding rule. If it's invalidated, if everyone, despite how they necessarily feel about the compliance burden, or they've essentially built a business around it, they built a model around it, and having to build a new model around it, or sitting there, which is more likely, sitting there in limbo for potentially years with these rules just kind of out in the ether, I think causes some concern amongst folks in industry as well. Because one thing seems clear, if the CFPB its funding structure were invalidated last week, it's not like Congress has the ability right now to turn around and put in place a new apparatus, right? Because there is a lot of binary positioning up there on the CFPB right now. The thought that they could come together and find compromise on new statute around a new structuring of the CFPB in this environment is is very hard to fathom, which would
cool.
then compound that uncertainty.
Well, not only that, it's like, thinking about the mortgage industry, right? And I'm going to include credit unions and banks in this, right? We spent maybe trillions of dollars on technology to get us up and running for TRID, right? Are we just going to turn off that technology if the CFPB goes away? Probably not, right? Odds are, if the CFPB was found unconstitutional, or their funding mechanism was found unconstitutional, you'd still probably follow TRID, right? Are you all of a sudden going to start allowing again, going back to LO comp, are you just all of a sudden just going to throw all that out the window? Probably not, because that's just going to allow bad actors to come back into play, right? I mean, some of these things, it's just common sense. Like, do we want it is, on one side of the fence, do you want consistency when it comes to how the CPB operates from a regulatory standpoint, enforcement through versus guidance? But at the same exact time, you're not going to roll back everything that they've already put in play. You're just not going to. You've already spent way too much money. You're already invested in this. It's common sense. Just my opinion. Just my right. humble 2 cents. Anyways, all right. So Chopra vindicated. Okay, good. He's beating the drum. He's beating the drum so much. Just this week, he's in New York again, pushing the envelope about junk fees.
Yes.
Let's talk this. Yeah, in the last few seconds we have, we're a little bit over time, but that's okay. He's on his he's like, I'm on a roll. I'm going to keep going. Let's go to New York. Well, let's talk junk fees.
Yeah. So a month or two back, I guess a couple months back now, there was an interesting CFPB blog post, which is often kind of a precursor to an RFI, which is a precursor to a potential rulemaking, and where the CFPB laid out its case on its interests around looking at the mortgage space in terms of fees associated with, let's say, the home buying process. And I think some examples that were raised range from mortgage origination fees, title insurance fees, appraisal fees, credit reporting fees, and this latest go around was really zeroing in on credit reports and the fees associated with that. And I think Chopra's, in his comments, in his remarks, I think he did point direct some of the blame away from the lenders. And, to your point, and we've had this conversation before, where it's like, sometimes you don't have a choice. You're buying reports from resellers, and, a lot of this is a fixed arrangement. It's pretty clear that they're planning to zero in more. We've heard through the rumor mill that there is likely to be, we shouldn't be surprised to see an RFI really focused on credit reports maybe sometime in the very near future. I mean, it could be a matter of days, it could be a couple of weeks, but we've been given every indication that seems to be coming. And so it'll be interesting to see where they go with this. But the level of specificity, especially in those most recent remarks, suggests that they're more than this is not just a fleeting thought, if that makes sense.
Sure. So, but it's interesting. I don't necessarily know if it's good or bad timing, right? But I mean, or in your opinion, are they even factoring in FHFA's revision to the credit score model, right? And
right,
because there will be a cost shift associated with that as well. So, and I guess that's a TBD cost shift.
That's right. Yeah, and I mean, look, we could dedicate a whole podcast to that topic, which still has some runway left in it, from my understanding. And I think honestly, depending on who wins the November election, that issue may go away. It may it may change with some respects. It's hard to tell what a Trump administration would do with if anything, with the buy merge proposal. It's hard to tell what a new director would do in terms of bringing that to finality. But I think we're looking at Q1, Q2, 2025 for that to kind of culminate. So more dialogue to be had on that front.
Okay. Well, Zach, we're a little bit over time, but that's okay. I'll repent later with Justin. I appreciate your time today, as always. Always appreciate your insight into everything happening in DC. And again, always good to talk to you.
All right. Great to talk to you, Peter.
Of course. Thank you again to Lender Price for sponsoring our policy series. And to all of you, we know your time is valuable. Thank you for tuning into the latest episode of Acuma's On Point podcast. We hope you enjoyed it. Until next time, bye for now.
Thanks for listening. We'll see you next time at the Acuma On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acuma.org. And to get the latest updates, head over to our LinkedIn page.